Not financial advice. DYOR. Never invest more than you can afford to lose. Hey everyone, welcome back to Crypto Coin Insider. Today is November 25th, 2025, and Bitcoin is in one of the most emotional spots we have seen all year. We have whales going crazy, fear and greed in extreme fear, and a fresh death cross on the higher time frame. In this video, we are going to use the AlphaFlow Pro dashboard and the Elite Crypto Analysis panel you see on the chart to answer one big question. Are we close to a bottom, or is a deeper crash still on the table? Stick with me to the end because I will also lay out a simple DCA plan with clear support and resistance levels, plus where I think the best risk-reward sits right now. Let's start with what AlphaFlow Pro is telling us on this daily Bitcoin chart. At the top right, you can see the market status is locked in bear mode. The phase reads deeply oversold, and the action line literally says monitor closely, nearing bottom, with a note that we need the MVRVZ metric to flip from below minus 0.5 and then see a rally. In plain English, that means on-chain data says most shorter-term holders are underwater and pain is high. But historically, this is where smart money starts scaling in. Think of MVRV like the gap between what people paid and what the coin is worth on the market. When that gap is negative and extreme, you are basically shopping from people who are panic selling their bags at a discount. Below that, AlphaFlow Pro shows the price sitting roughly 20% under the 200-week moving average slope. That is ultra rare. The last times we were this stretched under the 200-week were during major capitulation events, and each time they ended up being very strong long-term buying zones, even if price still dipped a bit lower first. Volatility on the panel is sitting around 10%, telling us we are in a high-energy environment. Big swings up and down are normal here, not the exception. Now, let's connect that to Elite Crypto Analysis on the right side of the screen. Elliott Wave is flagged as a bullish impulse, waves 1 to 5. What this means is the algorithm thinks the larger 5-wave upward structure is still valid, but we are currently in a corrective leg inside that bigger trend. Imagine a staircase going up. Each step up is an impulse, and the flat parts where you catch your breath are the corrections. Right now, we are in that painful catch-your-breath phase after a huge run, not necessarily the end of the entire bull cycle. Sentiment on the panel is marked bearish, and the trend is also bearish, which lines up perfectly with what we see in price, a series of lower highs and lower lows since early November. Volatility on this panel is around 4 to 5%, so day-to-day candles are wide, and that is exactly the type of backdrop where emotional mistakes get made. Look at the key levels the Elite Crypto Analysis table is giving us. Support is down in the low 80K zone, and resistance sits up near the high 100K band. That is a huge range, and the risk-reward metric is printed at roughly 2.5 to 1 in favor of the bulls. Translated, for every unit of downside risk from current levels to support, the potential upside back to resistance is more than double. That doesn't mean we can't drop. It just means that mathematically, for swing traders and long-term accumulators, this zone has historically been attractive if you size your positions correctly. Now, zooming out from this chart to the wider market, what are the whales doing? On-chain analytics firms like Sentiment and Glassnode have flagged this past week as one of the most active whale weeks of 2025, with over 100,000 transactions above $100,000 and almost 30,000 transactions over $1 million moving on-chain. At first, that wave of activity matched the sell-off as Bitcoin slid from the 120K region down toward and below the 90K handle. But over the last several days, wallet data shows a flip from distribution to accumulation, especially in large wallets holding more than 1,000 BTC. In simple terms, the biggest players dumped into strength earlier in the month, helped drive this crash, and are now quietly buying your fear on the way down. This matches what AlphaFlow Pro is hinting at with that nearing bottom tag. When the model shows deeply oversold, whales are active, and prices are sitting well under long-term moving averages, you often get what traders call a transfer of coins from weak hands to strong hands. That doesn't give us an exact bottom tick, but it does say, be very careful about selling everything into extreme fear. Speaking of fear, let's talk about the Crypto Fear and Greed Index. Several live trackers put the crypto market firmly in extreme fear over the weekend, with readings in the low teens. One site even had the broader crypto index around 19 out of 100, which is still firmly in the fear zone. Historically, when this index spends time below 25, it has lined up with areas where long term investors who can wait months to years got some of their best entries. A good way to think about this index is a crowd thermometer. When it's very low, the crowd is freezing and wants out at any price. When everybody's freezing, the person with the warm jacket and patience tends to win. Now, we have to overlay macro and the Fed. Over the past month, the Federal Reserve's messaging has stayed hawkish, with officials pushing back on aggressive rate cut hopes, which has supported the US dollar and added pressure on risk assets like Bitcoin. At the same time, markets are now pricing a high chance of at least one rate cut into December or early next year as growth metrics soften. We also have ongoing ETF outflows, with spot Bitcoin funds seeing billions in redemptions over the past 4 weeks. So, macro is a tug of war: tighter financial conditions and ETF selling on one side, versus growing expectations of easier policy later and some institutional dip buying on the other. That's exactly the kind of backdrop where range trades and violent squeezes are common. Now let's bring it back to the chart and talk support and resistance in a way you can actually trade. On the downside, the nearest strong support band sits in that low 80K region highlighted by Elite Crypto Analysis, which also lines up with recent wick lows and areas that on-chain cost basis data flags as a cluster for short-term holders. If that level fails, the next obvious downside magnet from a technical and sentiment standpoint would be the high 70K to mid 70K zone, where several macro analysts warn forced selling could accelerate. On the upside, we still have heavy resistance in the high 80s to 90K zone, which rejected price repeatedly this month. Above that, the next real wall is closer to that 100K psychological mark, which is also where ETF inflows previously cooled and heavy profit taking kicked in. Until a Bitcoin can reclaim and hold above that region, any rally is still technically a relief bounce inside a broader downtrend. Now, about risk reward and how to survive this environment. The Elite Crypto Analysis panel shows that 2.5 to 1 risk reward in favor of the bulls from roughly today's area to the marked support and resistance. But that math only works if you manage position size. A simple way to think about it is this: if you are long-term bullish on Bitcoin and you believe we're somewhere near a cycle correction low, but not exactly at the bottom, you can treat this like slowly walking into the ocean instead of diving headfirst into a wave. Here's a straightforward DCA-style approach that fits what AlphaFloat Pro and Elite Crypto Analysis are suggesting. Again, not advice, just an example strategy. First, you define your total planned investment amount for this correction, an amount you can emotionally and financially afford to lose without wrecking your life. Split that into 4 parts. Part 1, you deploy the first quarter in this current oversold region while AlphaFlow Pro is still flashing deeply oversold and the market is in fear. Think of this as paying for time in the market. Part 2, if price revisits or slightly undercuts that low 80K support band, you deploy the second quarter. That's the true buy the dip tranche at or near the area where support and whale accumulation are strongest. Part 3, if instead of dropping, Bitcoin bounces and starts closing candles back above the key resistance zone noted by Elite Crypto Analysis, especially if the trend box flips from bearish to neutral or bullish and sentiment improves, you deploy the third quarter on strength. This rewards confirmation instead of trying to pick the perfect knife bottom. Part 4, you keep the last quarter in reserve either for an extreme flush into the 70K region, where fear and greed would likely hit record lows again, or for a later breakout retest once Bitcoin is clearly back above the 100K region and the 200-week moving average is turning up. This final piece is your flexibility fund. For exits, you can think in layers as well. In a range like this, traders often take some profit as price approaches the heavy resistance band in the high 80s to 90K zone, then leave the rest targeting a retest of prior highs. If we do get a strong relief rally and AlphaFlow Pro flips from deeply oversold to overheated, with MVRVZ moving well above historical norms and the fear and greed index heading back toward extreme greed, that's where trimming risk aggressively starts to make sense. On the downside, a clean weekly close under that low 80K support band, combined with the risk reward metric dropping and the trend remaining strongly bearish, is the kind of signal where protective stop losses or hedges become important. Remember, risk management is not about being right. It's about staying in the game long enough for your thesis to play out. One quick word on how to use Elliott Wave here without overcomplicating it. The Elite Crypto Analysis panel saying bullish impulse, waves 1 to 5, basically means we're in a big uptrend made of 5 waves and we are currently correcting after a completed impulse. Historically, wave 4s can be sideways and choppy, and they often scare out late buyers before the final leg higher. If this script plays out, the current zone could be that messy wave 4 style correction before a final push later into 2025 or beyond. But if the structure breaks down and we start losing those key supports with no bounce, then the count can morph into a much larger corrective pattern. That is why we marry Elliott Wave with concrete support and resistance and tools like AlphaFlow Pro instead of using wave counts alone. So where does all this leave us today? Let's wrap it up. Final verdict. Right now, Bitcoin is officially in a bear phase on AlphaFlow Pro, deeply oversold and trading well under its long-term moving averages. At the same time, whale data shows some of the highest large transaction activity of the year, with big wallets quietly shifting back toward accumulation while retail sentiment sits in extreme fear. The Fear and Greed Index is still screaming fear, which historically has marked strong long-term opportunity zones for patient investors. Macro and the Fed are still a headwind in the short term, and ETF outflows plus the recent death cross mean we cannot rule out another leg down toward or even below that low 80K support. Putting it all together, this looks less like the start of a brand new crash and more like a late-stage capitulation inside a larger bullish cycle, where risk-reward is starting to tilt back toward the upside, but only for people who use DCA, position sizing, and clear invalidation levels. Aggressive traders can look for swing entries near support with tight risk, while long-term accumulators can use a stepped DCA plan like the one we walked through. Panic selling into whale accumulation and extreme fear has rarely aged well in past cycles, but going all in at once has not aged well either. If you watched this far, hit like, drop a comment with your current strategy. Are you buying this dip, staying in cash, or waiting for a clear breakout? And make sure you subscribe with notifications on so you do not miss the next AlphaFlow Pro and Elite Crypto Analysis update. Thanks for watching Crypto Coin Insider, and as always, stay safe out there.